Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play on Monday. All right, so yeah, there was a huge rally today. It was all about the technology sector. That's been the market leader, and it was great to see the FANG stocks and the rest of the technology sector running today. But the penny stocks were running as well, and we have quite a few stocks that closed the day in play today. First up, we have ENRJ, closed up nearly 20%. Needs to get above 50 on RSI here. So it made a bullish move today above the 50-day simple moving average at 19 and the middle Bollinger Band, which is also the 20-day simple moving average at 20. It did close above both levels. So if it can stay above 20 and 19, that's a signal that this uptrend is still intact. Now, it did hit resistance up here at the 200-day simple moving average at 26, and it closed below the 100-day simple moving average at 22. It has to get above both levels to head higher. If it fails to get above 22, that's going to signal consolidation. Now, if it closes above 26, the 300-day simple moving average at 31 will be on deck. If it drops below 19, it will be a risk to hold. Okay, if you look at the ENRJ 15-minute chart, you can see here in the morning it had the big pop, and it hit that 100 simple moving average at the high, the gold line. That was the top moving average at the start of the day, and it pulled back. And then notice how it failed to get above the red line. That's the 200 simple moving average. Then the blue line turned into resistance. That's the 300 simple moving average. It ended up dropping below the dotted purple line, which is the middle Bollinger Band of the 20 simple moving average, and it found support at the very last level right here, the 50 simple moving average. It has to hold this 20 level. It was a risk to hold into the close today, since it did close below the middle Bollinger Band at 23. It has to get back above that level to get the uptrend going, and 26 is the big level. Failed to get above 26 is going to signal a temporary top. Okay, let's look at SSC. Nice close today, closed up nearly 21%. Congrats to everybody that caught our alert last week. Now RSI is at 55, Fasto's at 80. You have a bullish crossover here on ADX that's continuing with plus DI breaking out higher, the green line. And so alerts were put out last week on the close above the middle Bollinger Band, and then again on Friday. I actually put out another video last night showing that SSC was turning this dotted purple line, the middle Bollinger Band at 176, into support. As I showed last night, that was the first close last week above the middle Bollinger Band since back here in January. Okay, so it tried to get above here, failed. So the close last week, that was your signal that it was a bullish change in trend, and today was the big payday. It had really nice follow through. So congrats to everybody that's been following our charts in TA. I recommend come and check out our chat. I will post the link below the YouTube video. The next two levels to break were hit intraday, and the share price pulled back. It's the 200 and 300 day simple moving averages. It needs to get above 247. If it can do that, then it could run up here and test this 50-day simple moving average and 100-day simple moving average resistance zones. Check out the gap up here. So there's a gap between low of day on this candle and high of day on this candle. So a run up here to the 50-day simple moving average at 278 would fill the gap. Notice there was a nice volume spike behind the move today. Now, if it fails to break that 250 resistance zone, that will signal a temporary top. And then if it pulls back, it needs to hold that middle Bollinger Band to keep the uptrend going. Okay, take a look at EKSO. Closed up 34% today. Very nice move. This is a thinly traded stock. If you look at the average daily volume, it's very low. It had a really nice volume spike today with 8 million shares traded, over 8 million shares, and it was able to break through major resistance levels. It started Friday, it closed Friday down here below all the moving averages that we follow. It was below EMA's 4, 8, and 13, the middle Bollinger Band, which is the 20-day simple moving average, the 50, the 100, the 200, and the 300-day simple moving averages. Today it was able to break through all those moving averages, and it hit the 300-day simple moving average at 215 and pulled back. So in my opinion, this is all that really matters right now. It has to get above 215. Above 215 signals more upside potential, similar to back here when it broke above the 300-day simple moving average in November, and it ended up running all the way up to 480. Now if the 200 or 300-day simple moving average turns into resistance, then the share price is likely to pull back. You want to see that gold old line, the 100-day simple moving average at 188, turn into support. If you look at the 15-minute chart here for EKSO, you can see it was at the low of the day down here at 1 o'clock, and then boom, all of a sudden volume came in. It broke above all the moving averages on the 15-minute chart. Once it got above this 300 simple moving average, basically at 161, that was your clear signal that it's ready to go. That was, and also because it was on a big volume spike, and so this was the load signal, and then yeah, it ended up following through, closed above EMA 4 at 207. You want to see that level hold. A drop below 207 would be a signal that the chart is cooling down. It needs to hold the middle Bollinger Band way down here at 170 to keep the uptrend going. Okay, take a look at AKER, closed up 15% today. RSI is at 74. You have Fasto at 85. It's hitting the key resistance level. All right, there was a gap up open today. So the red flag is there is a gap between low of day today and high of day on Friday. So a drop down here to this EMA 8 level at around the 80 cent level, 80 to 84 level. You know, that would basically, if it dropped down to the close on, or the high of day on Friday, that would fill the gap. Now going forward, it needs to break the blue line up here. That's the 300-day simple moving average at 98. Okay, so fail to break 98, it's going to signal it's a temporary top, and then you would likely see the gap below fill. You'd likely see a drop down to you know, around 81 or so. If it closes above 98, that's going to signal that it wants to break out higher. It's really simple right now. You know, it hit 98 and pulled back. That's the key level. The candles have been in a, you know, forming in this very strong uptrend. You can see the uptrend started back here in January when this dotted purple line in the middle Bollinger Band broke. And so as long as this dotted purple line keeps holding, the uptrend should continue. That's currently at 734. Okay, let's look at BLPH. This was a nice move today as well, closed at 14%. You know, this is a thinly traded stock, only 410 shares, 10,000 shares traded today. But as you can see here, it has a really good uptrend going, and so you can see it broke above the key resistance levels here. It got above the 220 high close, and so that was the key level to break, the closing price from last Thursday. And then now it's got the key level to break is up here at the 250 resistance zone. That's from January high close, not high close, but the January close here on the 24th and on the 29th. And so it's right around 247 or so. If it can bust through that, then you're looking at a run up here to around 267. That was the high close in the first week of January. Now, if the candles do stall out here, you want to see EMA 4 down here at 214 hold, and it would be best if it stayed above that 220 level. Okay, let's look at ACRX. Very nice move today. Closed up 13%. It did close with at high of day with Fasto at 100, so it is temporarily overbought. As you can see here on this chart, it had been trading in a sideways channel for multiple months. Today it broke out of the top of the channel. All right, this is the top here, this red line. So that close above is signaling more upside potential. Now the key levels to break are up here, the bottom of the gap. There's a gap between low of day on this candle and high of day on this candle from back in October. And so the bottom of the gap level is currently lined up with that 200-day simple moving average at 250, and just above is the 300-day simple moving average at 261. It needs to close above all three levels to start filling the gap. Okay, if it stalls out here at 250, that would signal a temporary top. Okay, take a look at WATT. Nice move today, back above 30 on RSI. This is a bounce play, back above 20 on Fasto. When when RSI is below 30 and Fasto is below 20, and then it breaks above, that is a signal, that is a buy signal. Okay, and so you want to have the other parts of the chart adding up to signal that this is in play. And today the close above the pink line, EMA 4 at 1686, has put Watt back in play, WATT. Notice how the pink line had been resistance during the entire drop. This is the first close above that level since basically back here. And so, you know, closed right at that level on the 12th. And so this is a bullish change in trend. If it can stay above 17, then EMA 8 at 1780 will be the next key level to break. And then, you know, it's going to have to get back up here above the 50-day simple moving average and middle Bollinger Band to get a new uptrend going. But, you know, first things first, this is a nice bounce. It looks like there was a bullish Harami reversal pattern here a couple of days ago, so it'll be looking to confirm that pattern. Yeah, and the bottom line is it's holding the 100-day simple moving average down here at 1565. If that level holds and it stays above 17, it will continue to be in play. Okay, take a look at LGCY. This is one of the small cap energy sector plays that we've been following, and it's just had this really nice uptrend. Closed up another 11% today. This has been a really good longer term swing trade for people that have patience. As you can see, it started January, down here at around $1.60. It finished December, close to $1, and then yeah, this has been a really nice move. It hit up here above 520 today. It's forming candles above the middle Bollinger Band. Notice how the dotted purple line was tested. It held over here, and it just keeps pushing higher. Right now, if you're trading this, you want to watch EMA4 at 458. If that's holding, the signals to keep riding. If there's a close below, similar to right here, the candles might work their way back to EMA 13 at 420 or down to that middle Bollinger Band at 407. As long as the middle Bollinger Band at 407 is holding, the uptrend is intact. There was some profit taking today off of the high of day. Notice the lit wick, and there was a big volume spike. So keep an eye on LGCY. We'll see if it can keep the uptrend going. Let's look at GERN here. Okay, yeah, this is another stock that's been on this really strong uptrend. Closed up another 6% today. RSI is at 91, so it's very frothy on RSI, but it's been at this level as well. It's been pushing higher. It's been deceiving, it's been defying gravity and just keeps, stair-stepping higher. You have a black candle that formed today. You notice that there is a declining volume pattern after the big volume spike here. So there was a big volume spike, and then volume has been decreasing the last 2 trading days. It formed this big doji here, but it continued pushing higher. This was the bearish doji star reversal pattern. It formed bearish Harami, bearish doji star. Now you've got a black candle that formed completely above the upper Bollinger Band. I mean, these are all signs that the chart is very frothy, so it wouldn't be surprising if it took a breather here sometime soon. The red flag is there is a gap between high of day on this candle and low of day on this candle. So when it finally does cool down, what you're likely to see is a pullback to you're likely to see a pullback to the gap level and see this gap fill. So what you want to watch is EMA4, and so EMA4 has been holding during the entire run, and so you can see the candles got above down here, and every single close during this run has been above the pink line. And so once it finally closes below EMA4 at 544, that will be a bearish change in trend, and that'll be a signal to lock in gains, and that's when you'd be likely to see this gap fill. A drop down to 5 would fill the gap. As long as EMA4 is holding, the chart is super strong. You just have to be careful here. It's looking frothy, and it could take a breather. There is also a gap way down here, so if it gets moving to the downside, it could possibly come down and fill this gap as well, and then bounce off that middle Bollinger Band and keep the uptrend going. That would be a big haircut if it dropped from 6 all the way down to 345. If you look at the 15-minute chart, you can see it has this kind of long ascending triangle type pattern forming. It broke out. It's trying to break out above, and it formed, basically it has the multiple top. It has a top here and then another top here, so it's finding potential double top resistance if this level fails to break. So it has to get above this 640 resistance zone. Notice that there was a lower high today, so a lower high going into the close. So that's so it needs to get back above and break the high close horizontal resistance, and then above this high close from the 22nd, and that would signal it wants to head higher. If it drops below the middle Bollinger Band at 597, basically drops below 6, that's going to be a red flag. And then what needs to happen, it needs to hold this green line here, and the 2 green lines, the 50 simple moving average and the ascending support line. Notice how this zone's been holding the whole time, and so if there's a drop below, that would be a big clue that the chart is cooling down. That's at 588, so a drop below 588 would be a red flag. And then finally, I'll leave you with the OTC stock. Keep an eye on CLS or CELZ. CELZ. Okay, this closed up 154% today. This does trade over the counter. It's on a multi-day run already, and this could be the top. It hit this key resistance level from back in February, so it needs to basically break the penny land level. If it can close above this closing price back here in the 17th of February, then that's going to signal that it wants to head higher, and then the high of day here is going to be the big level to break around 14 or so, and then you've got the high close here, and then basically what you'd be looking for is it working back up to that 100-day simple moving average at 273. Now if it fails to get above 0.1, get above a penny, that would be a red flag, and the candles could work back in the bands. Today's candle did close well above the upper Bollinger Band, and the last time that happened was on this candle in a red candle form, and it pulled back. And so what you'd want to see is this descending resistance line turn into support, and then you'd want to see EMA4 at 0.0053 hold. If the candles work back in the bands, EMA4 is likely to be tested. Now that the candles are above the 50-day simple moving average, the green line here that failed to break back on this resistance test at 0.004, the candles need to stay above that level. It will signal downside risk if they drop back below. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. I'll post the link below the YouTube video. Thank you.